For anyone relying on their state pension to keep up with rising living costs, a sudden cut of £130 a month sounds not only shocking, it sounds devastating. And yet, that's precisely the situation thousands of pensioners in the UK could find themselves facing. According to new warnings from HMRC, certain changes in benefit thresholds, tax adjustments, and overpayments are triggering automatic deductions from state pension payments, without many even realising it until the money is gone. This isn't a far-fetched rumour or some social media scare tactic. It's rooted in HMRC's latest guidance and real-life examples that have started surfacing across the country. The reason? A growing number of pensioners have unknowingly been pushed into taxable income brackets, especially those receiving additional support from private pensions, annuities, or even small part-time earnings. For some, even claiming certain benefits like the marriage allowance or backdated payments from years past has led to unexpected tax recalculations, resulting in monthly reductions from their pensions. The issue gets more complex with automatic tax code changes. Many pensioners have been assigned incorrect tax codes, and once HMRC detects what they call a discrepancy, they begin recovering the amount they believe is owed, often without proper communication or warning. And let's be honest, dealing with HMRC isn't always straightforward, especially when the language they use is filled with confusing jargon or buried in letters many people don't even receive on time. But don't panic, this video walks you through everything: who's affected, how these cuts are calculated, and most importantly, how you can challenge them if your pension is being unfairly reduced. We'll also explain how to check your current tax code, request corrections, and get back any overpaid amounts, because you deserve every pound you've worked for. If you or someone you know has noticed changes in their monthly pension payment, it's time to get the facts and take action. Hit that like button and stay tuned. Your money, your future, and your peace of mind depend on it. Let's begin by breaking down exactly why this situation has become such a mess in the first place. The state pension is often thought of as a fixed income, something that comes in every 4 weeks like clockwork, and should never change without a clear explanation. After all, you worked your entire life with the expectation that when the time came, you'd receive a steady, reliable pension from the government. But lately, thousands of pensioners have been left stunned when they discovered their payments had been cut without warning. And not by a few pounds here and there, we're talking reductions of up to £130 a month. That's not a small dent. For many, that's the week's groceries, the electric bill, or the difference between managing comfortably and feeling the squeeze. So how exactly has this happened? The core of the issue lies in how HMRC calculates your taxable income as a pensioner. While the state pension itself isn't taxed at source, meaning tax isn't automatically deducted like it is from a salary, it still counts towards your total income. Now, this becomes a real problem when you have other sources of income coming in, whether that's a modest workplace pension, some rental income, savings interest, or even a part-time job. When all of this is added together, it can easily tip you over the tax threshold without you realizing it. And once HMRC identifies that you've technically received more than you should have, according to their system, they automatically initiate what's called a recovery process. This process means they start clawing back what they claim is owed, and they do it by taking money out of your future pension payments. Often, they don't even bother to confirm whether you were aware of this issue or give you a chance to respond first. Now, let's be clear. Most people affected by this didn't do anything wrong. They didn't try to hide income. They weren't fiddling the system. In most cases, they simply weren't told that their income crossed a certain line. The government is expected to send out tax codes each year that inform you what your income allowance is and how much tax you might owe. But these codes can be confusing, especially if you're not familiar with how they work. Worse still, if you move house, don't receive a letter, or if there's an administrative error, you might not even be aware that your tax code changed. And once the wrong code is applied, everything that follows becomes inaccurate. You end up being undercharged tax for a while, and then, bam, the shortfall is dumped on you months later, often in the form of reduced pension payments. This has left a lot of older Britons feeling betrayed. After years of paying into the system, they are now left trying to navigate complex letters, automated phone systems, and online portals just to understand why their monthly income has dropped so significantly. And if you've ever tried calling HMRC, you know it's no walk in the park. You can be left on hold for hours, only to be transferred between departments or told to go online, which, for many pensioners, isn't always a viable option. Not everyone has the internet at home, and not everyone feels confident navigating government websites filled with technical language. Let's not forget, too, that these reductions come at a time when everything else is going up. Energy prices are still painfully high. The cost of food continues to rise. Council tax has increased in most regions across the UK. And even simple things like taking the bus, buying toiletries, or going out for a coffee now feel like luxuries. For those living on a fixed pension, any unexpected drop in income is enough to cause real anxiety. It's not just a matter of tightening the belt, it's a matter of wondering how you're going to make ends meet this month. One of the most frustrating aspects of this situation is the lack of proper communication. In a fair system, you'd expect HMRC to send out a clear notice explaining the issue, laying out the numbers, and giving you a chance to ask questions or challenge the findings. But what we're hearing from many pensioners is that the first they hear about the issue is when their pension is suddenly smaller. By that point, the money's already gone. You can appeal, yes, but it takes time. And while the appeal is being processed, the deductions continue. So even if you're eventually proven right, you're still out of pocket for weeks or months. Let's talk for a moment about tax codes, because they are at the heart of this mess. Every taxpayer in the UK is assigned a tax code that tells your employer or pension provider how much tax to deduct. If your code is wrong, for example, if it assumes you're getting more income than you actually are, you could end up being overtaxed. Or if the system underestimates your income, you might not pay enough tax at first, and then get hit with a large correction later. Pensioners who receive both the state pension and a private pension are especially at risk here. Often, HMRC will apply your full tax-free allowance to one pension and not the other. But if the order of those pensions changes, or if one increases slightly, it can throw the balance off, and suddenly the system decides you owe money. Again, none of this is explained in simple terms, and most people don't realize it's happening until it's too late. What makes this even harder to swallow is the feeling that, as a pensioner, you're being punished for doing the right thing. You saved. You worked hard. You planned for retirement. And now, instead of enjoying the peace of mind you earned, you're dealing with unexpected deductions, cryptic letters, and the stress of trying to fix someone else's mistake. It's not just frustrating, it's disheartening, and in some cases, it's leading to real hardship. People are skipping meals, delaying paying bills, or dipping into savings meant for emergencies, all because their state pension was unexpectedly reduced and they couldn't get answers in time. So, what can you do if you suspect this is happening to you? First, check your most recent pension payments against what you used to receive. Even a small change, £10 or £20 less, could be the start of a larger deduction. Next, review any recent correspondence from HMRC, even if it looks unimportant. Often, the clue is hidden in a tax code update or a letter marked Notice of Underpayment. If you're unsure about what your tax code means, you can call HMRC or use their online tool to check it. You're looking for anything that seems out of place, an unexpected code, or an indicator that you're paying tax when you shouldn't be. If you do find something wrong, don't panic, but act quickly. Contact HMRC and ask them to explain the change. Make a note of who you spoke to, what they said, and what actions they promised to take. It's also wise to write a formal letter requesting a breakdown of the calculation. If the deduction was made in error, and yes, errors do happen, you have every right to request a refund and have your payments corrected. It may take some persistence, but many pensioners have been successful in reversing wrongful deductions once they gathered the right information and kept following up. It's also worth reaching out to a financial advisor or charity that helps older people navigate pension and tax issues. Organizations like Age UK and Citizens Advice can provide support, sometimes even accompanying you through the complaint or appeal process. They know the system, and they are used to fighting these battles on behalf of pensioners. You're not alone in this, and there are people and services out there that can help you get what you're rightfully owed. Another aspect to keep in mind is the growing number of people being caught out by overlapping benefits. For example, if you've recently started receiving a top-up like pension credit or even the winter fuel payment, it could inadvertently affect your overall tax position, especially if it pushes you above a certain threshold. What's meant to be financial support ends up triggering a tax review, and before you know it, you're losing part of your state pension to make up the difference. Again, it's not clearly communicated, and most people wouldn't even think to connect the two. But the system treats every penny as part of your taxable income, and that's where things start to unravel. In a time when everything feels more expensive, when council services are being cut, and when older people are already having to stretch their budgets to breaking point, this kind of uncertainty is the last thing anyone needs. It's not just about the money, it's about the principle. You've done your bit. You've contributed to society. You've earned the right to a dignified retirement. The very least the government can do is ensure that your pension payments are handled with care, fairness, and transparency. And yet, here we are, talking about £130 being deducted without warning, without clear explanation, and often without justification. It doesn't have to be this way. What we need is a pension system that respects the people it was designed to serve. That means better communication from HMRC. That means easier ways to check your tax code. That means faster appeals and real accountability when mistakes are made. Until then, it's up to us, yes, all of us, to stay informed, share this information, and hold those in power to account. So if you've found this information helpful, please do share it with friends, neighbors, or family members who might be facing similar issues. The more people know what's going on, the better prepared they'll be to handle it. No one should be left in the dark when it comes to their pension. You worked hard for that money, it's yours. Let's make sure you keep every penny you deserve. And don't forget, if you subscribe to this channel, you'll get more updates just like this, real information, explained clearly, with no nonsense. We'll keep digging into these topics and making sure UK pensioners stay informed and protected. Thanks for watching, and take care until next time.